What's up, everybody? Michael and Coco here to do some technical analysis on the financial markets. Let's go ahead and get into it. All right, welcome back. If you weren't aware already, the FOMC came out with their statement from the two-day FOMC meeting. Really, to sum it all up, looking for lower unemployment rates, lower interest rates held till 2023, basically 0 to a quarter point, and targeted higher inflation, potentially above their 2% target, because it'll average it out to around 2% if we go above it. That's what was stated. Obviously, a lot of criticism around that, but we're here to talk about the technicals, what took place in the markets during that conversation or during the press release, and then what is going on later on this week. Well, first off, we have Quad Witch on Friday. Today, not only was the FOMC meeting, but we also had VIX expiration. So there's just a lot of volatility this week. And if you're not a professional trader, these are the type of weeks that you kind of just want to sit on the sidelines, because really what takes place is a lot of choppiness. So you can get whiplashed very quickly. So we're going to start off by looking at the SP 500 here on the weekly time frame. And I did a little bit of changes that I want to point out really quick. First off, we captured the 5 EMA again. So we lost it. Now we recaptured it, but it's this inverted type hammer candle, still got this dark cloud variation, which is a reversal type pattern. One thing that I wanted to note was if you look at this as a kind of a bull channel right here, or potentially even a rising wedge, we did recently break below it on this dark cloud variation. So this is pretty bearish as far as what could potentially happen moving forward. This dashed line is an area of support, and it looks like it's still holding up here at this particular point in time. If we break below that, the next target area is at 32.58, and resistance on the weekly right here is going to be at around 34.50. Here is the S&P 500 on the daily time frame, and you could see the more scoped out version to understand where these trend lines come from. You can click the link in the description to view my charts. And really what we got going on here is a pretty exhaustive type looking day today, but that's all part of this whole, very interesting, choppy, a lot of information coming at us this week. So we had this gap up, move higher, and then ultimately just ran straight down to the low of the day, closing below even the low of previous day, which is very bearish, and losing, we're basically sitting on the 5 EMA, but if we're being extremely technical here, we are down, we're underneath it by 10 cents. So we lost action on the 5 EMA, so this is more of a bearish, obviously, type move. Full bearish engulfing from an upwards projection, so that's also a very bearish type move, but we'll see what takes place. We have support that held here by the 50 period moving average, and then we have this green line that's going to be acting as a support here too as well. So just a lot of what's the word here, confluence, maybe that's the word, a lot of areas of support kind of coming together right here. And then we also have a lot of resistance up ahead. We mentioned on the weekly time frame that 34.50 seemed like a pretty significant area, and as far as right here, it's about 34.40 to about 34.20, this kind of zone right in here that'll be acting as resistance. If you look at the pattern, bear flag, you have a pull to the downside. It's kind of consolidating sideways. So either we get a break above or we get a break below, and then we got to consider what's going to be taking place after that point. But right now it's just trading and consolidating, probably for the potential of a bigger move in either direction. All right, so here is the S&P 500 on the 30-minute time frame. And as we discussed yesterday, we can probably very well just gap in within this channel, and then we'll probably see some back and forth action. We did get a pull back, then it bounced from there, but then got rejected. And as you can see, it kind of just played ping pong up until the last hour and a half. That was really when the Fed start coming out to talk and releasing their statement. And really the last hour and a half of the day, we went from the high of the day all the way to closing to the low of the day. So just extreme volatility. This is what I mean by whiplashes. So these things can take place during these type of events. So we not only had a false breakout and caught people up in this area, which is, very bearish, but then we trap them, moving them down past the other areas of support. So heading into tomorrow, we have some areas of support and resistance that I want to quickly discuss. 33.80 looks like an area of support. And then we have resistance is going to remain right here. I'm just going to call it 3,400, the first area. And then the high of today, which was 34.2892. So we'll just call it 34.30 just for rounding purposes. But clearly that level acted as resistance. It did previously in the chart, and then also acted as support too. We said that the falling wedge here, we had a target from the breakout and this bull flag up to about 34.70. This still remains actually the target here in the short term, but if we start getting closes below this flag level right here, if we maybe get below this 33.80, then we're going to go ahead and remove that from this chart. Keep in mind, wherever the price opens up the next day, say if it gaps up into this channel again, that would convert this 3,400 to a level of support. So it's resistance now, but if the price gets above it, obviously it's going to act as a level of support. That's how we have to look at that. Intraday, I posted on my Instagram story, so if you don't follow me there, follow me. And for some reason, apparently my stories were not posting that I noticed later on. So I don't know if they're posted now or not, but it just kept on moving around. Besides the point, but what I mentioned was that when we started moving up past this resistance line, our previous day's resistance at about 34.20 on about this candle, we had a negative divergence taking place in the MACD. So as you can see right here, this hammer candle to that high, and then it was from here to this low. So we had a negative divergence taking place, and boom, what you see happen here in the last hour and a half could very well may reflect what was taking place there in the MACD. So gave us a heads up notice. Unfortunately, I don't think it even got out to my story, so it is what it is. Let's go ahead now and take a look at the VIX. All right, so here is the VIX on the daily time frame. I adjusted this upper trend line. It was more steeper of a falling wedge, and we're kind of seeing a breakout. So I just did an adjustment slightly, only because we've really just been kind of going sideways right here with the VIX. And if we do start getting a real breakout to the upside, I would imagine that we'll start seeing some downwards momentum in the SP 500. Still got that gray box down here. That is the gap that's yet to be filled. We might have the potential to break down and still fill it. I mean, there's still a lot of bullish things that can take place in the stock market, but you know, it's just a very hard week to determine what's going to be taking place. One thing that I do know is volatility increases this week. And a saying on Wall Street is that on Fridays, they don't typically make new lows. So coming into quad, which it might be more of a bullish thing than it is bearish, as traders start having expiration on their contracts and start moving into other positions. We will see. The US dollar is the chart that we all need to be paying attention to, but it just fails to make any type of move and has been trading sideways this entire week of trading. So we got to just monitor it. It's still holding on this upper trend line. It broke out and is just kind of consolidating sideways to just slightly down. Like I said on the previous market brief, I'm not going to think that this is going to have legs until we get a close above 94. And if we start seeing the dollar move higher, I think we're going to start seeing assets like gold, silver, and the S&P 500 and other indices move lower. Positive divergence in the RSI and the MACD. It looks like it wants to move, but it also looks like it's just trying to come back and roll down. In overall context, when you look at the chart from afar, it's in bearish context. So it wouldn't be surprising to see this thing continue to move lower, but we need to see it close back into this channel to see that it's going to come back more down to the 92 handle. Today, it had a low of 92.79, so a lower low than the previous day and a lower high. That is somewhat bearish for the dollar, but we did see somewhat of a rally here towards the end of the trading day. That is pretty bullish for the dollar. Gold showed some signs of strength today. We're at up $4.30, peeking our head, closing slightly above this trend line. I'm not going to give it any weight until we, have a weekly close. So if we close this week above it, then I'd be like, okay, this is actually looking much stronger. In the overall context, the chart is strong. Don't get me wrong here. We have the MACD. Looks like it wants to start crossing over and get back more into bullish momentum. You have the 50 period sloping up. You have the 200 period sloping up. You have a nice spread between the two. A long consolidation. This very well might send the price of gold higher, at least to around potentially the previous all-time high, which was just above 2,080. But I think we had a close 2,070, right around that range. So we're going to keep an eye on this. Remember, if the dollar starts heading downwards, we're going to probably see gold try to go attack its previous all-time high. Hi-ho silver here, still moving sideways, and it's been moving sideways, consolidating really since, 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, it's just been going just like a horizontal line. I'm thinking that, the tighter this thing coils, the bigger the move in either direction. Still waiting for something to take place in silver. Silver, as previously stated, has not reached an all-time high like gold did, has a long way to go until that point. I'm a big fan of silver. I own it, the physical, and then I plan on getting into SLV, potentially some long-term option contracts. I haven't decided yet when we start seeing a breakout to the upside, or potentially even may play it on a pullback to certain levels. As a bull here, I don't expect it to fall, but I would like it to fall along with gold, because long term I'm really bullish and I want a big pullback to be able to scoop up a lot more. Bitcoin here is continuing to make moves to the upside. We mentioned that there's this overhead resistance right here on the bear flag, and once that overhead established resistance is broken, you sometimes see aggressive moves. Well, that aggressive move is still working in its favor. Haven't reached the resistance level of 11,200 yet. What the bulls need to see happen is a recapture of 11,200 to act as an area of support. Keep in mind the price action is still below the 50 period moving average, and that should act as resistance as well. The 50 period is right next to this level of resistance. So in order for the bulls to recapture and start getting some strength, we need to get some closes above there for a week, a couple of days, something to add some strength there. Because if you look in the history of the chart, it clearly acted as resistance and support previously. On the weekly time frame, I was stating the other day that this could be potentially a dead cat bounce if we don't reclaim that 11,200 level. Here's the NYMO, still printing a negative breath, minus 6.68. We've been saying that, hey, it could be a potential good short opportunity if we get back above zero, and depending where the price action is on the S&P 500 or even the NASDAQ, we can potentially see a good risk versus reward trade to the downside, maybe even the Russell 2000, maybe even the Dow Jones. We really got to play it day by day to see what is taking place in the markets if we start getting a positive breath. Here is the CPC smoothed over a 10-day period moving average. We were calling this move that crosses above 0.8 a sell signal, and that was, the market hasn't really pulled back sufficiently by any means. But really what we were saying was, okay, make sure you have your stop losses in place, make sure you're hedging your long positions, or you're taking profits at least off the table. And especially coming into this week where we have so many different things taking place. Now the big tech sector right now is seeing some weakness take place, and it's going to be interesting to see how this plays out here when we look back at this, in about 30 days or maybe even past October, if this actually signal was something that we should have been paying more attention to. Previously, when we look back in the history of the chart, it wasn't crashes that took place other than one time right here on this chart, but there was pullbacks that took place when we saw the rise above 0.8. So be careful with this. Take note of it. It's still here. It's still fresh. Right around, where is it at? It's right about at 0.84. And then if you look at the CPC by itself, you'll see more spikes. And that's right now at 0.69, which means still the market is more, the retail trader portion of the market is more bullish. And, Jim Bianco posted another tweet recently, and then I also saw it somewhere else, not his tweet, but the chart that he used was showing the change in call volume versus put volume on single traded contracts. And it really goes to show you just how much of a mania these option contracts are right now, where we're just seeing a lot of action on the call side. So these things don't end that well, and the call side of things that he was mentioning and talking about, the majority of those were within a 2-week expiration date. So it just goes to show you there's a lot of hype, a lot of mania going around right now in the options market. Here is the 10-year treasury on the weekly time frame. Still, nothing giving us, it's not giving us much. I'm not going to spend much time here. If you want to see what I talked about on the previous market brief, please do. We broke out of this trend line. I think that it's short-term bullish and we could see a squeeze above, but really it's just tracking sideways at the moment. So consolidating, might be making a move to the upside, and then 0.60 right below where we're at is an area of support. So we will see what happens. That's all I have for you on today's market brief. Be nimble out there if you are trading these markets, because not everything goes to plan, and we have a lot of volatility here taking place in the next couple of days. So we're going to see a lot of chop fest happen. It's going to be hard to see momentum, and momentum makes it very easy to trade. That's all I have for you. I will see you back on the next episode.